Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Tuesday the 16th of December. I'm Caroline Hepke in London.
And I'm Stephen Carroll in Brussels. Coming up today, how two Saudi sisters have become power brokers courted from Wall Street to world capitals.
President Trump sues the BBC for $10 billion over the misleading edit of a documentary.
Plus, a little less high-end, why London's luxury home market has had its worst year since COVID.
Let's start with a roundup of our top stories.
Two Saudi sisters have built one of the world's most powerful family empires, amassing vast global holdings from US stocks to prime real estate. Bloomberg's reporting has detailed their growing influence, backed by deep ties to Wall Street and Saudi leadership, and how it's making them central players in the kingdom's economic ambitions. Bloomberg's Tiwa Adebayo has the story.
Sisters Lubna and Hutham came of age at a time when Saudi women weren't permitted to drive and needed a male guardian's permission to even get a passport. Yet they sit at the helm of a sprawling and secretive empire valued at more than $50 billion, according to the Bloomberg Billionaires Index. The success of the duo's Olayan Group could put the family's net worth even higher, with some sources pegging their fortune above $100 billion, in the same league as magnates Bill Gates and Mukesh Ambani. But it's the family's influence rather than their financial firepower which has earned them the respect of Wall Street bosses seeking their advice on expanding into Saudi Arabia's economy. At last month's White House banquet for Crown Prince Mohammed bin Salman, Lubna Olayan was seated next to Elon Musk. Aided in part by their loyalty to the kingdom, even during tough times, the Olayans have become an indispensable national fixture, say those within their circles. In London, Tiwa Adebayo, Bloomberg Radio.
Now, US negotiators have offered more significant security guarantees to Ukraine in a renewed bid to end the conflict with Russia. According to a White House official, the Trump administration said that it would provide strong Article 5-like assurances to Kyiv as part of the current deal to find a diplomatic solution. Speaking yesterday, the US president claimed the conflict is nearing resolution.
I think we're closer now, and they will tell you that they're closer now. We had numerous conversations with President Putin of Russia, and I think we're closer now than we have been ever.
US President Donald Trump made those remarks after he talked to a gathering of European leaders hosted by German Chancellor Friedrich Merz. Meanwhile, the new chief of Britain's Foreign Intelligence Service, MI6, has accused Russia's President Vladimir Putin of deliberately prolonging negotiations to end the war. In her first public appearance in the role, Blaise Metraweli said that the Kremlin is trying to subjugate Ukraine and NATO members. Meanwhile, Ukraine said yesterday its naval drones damaged a Russian submarine in the Black Sea port of Novorossiysk, inflicting critical damage.
Donald Trump is suing the BBC for at least $10 billion over what he claims was a misleading edit in their documentary last year. The edit gave the impression the US president made a direct call for violence in a speech ahead of the attack on the US Capitol on the 6th of January 2021. Bloomberg's Ewan Potts has more.
Donald Trump's defamation lawsuit against the BBC was filed yesterday in federal court in Miami. The US president says he's suing the broadcaster for, quote, putting words in my mouth. The Panorama documentary made it appear that Trump told his supporters they should walk down to the Capitol and fight like hell. In fact, he said they should cheer on our brave senators and congressmen and women. The fight like hell remark was from a much later part of the speech. Trump's lawyer claims the incident is part of the BBC's long-standing pattern of manipulating President Trump's speeches. The BBC has previously apologised to the president but rejected his demands for compensation, saying there is no basis for a defamation claim. In London, I'm Ewan Potts, Bloomberg Radio.
The UK government has finalised a long-awaited free trade agreement with South Korea as it continues to face unpopularity at home. The agreement is being branded as Britain's fourth major trade deal this year, but the £400 million boost it's expected to create is considered too small to boost Britain's GDP in any meaningful way. But it's another foreign policy success for the Prime Minister Keir Starmer, despite his unpopularity amongst UK voters. He was asked yesterday yesterday in Parliament if he could confirm whether speculation about his leadership was even coming from his own team.
No, I'm not sure I can. It seems to be pretty right. In terms of the code, I know exactly where it should be dealt with, but I can say hand on heart that none of it comes from me or is encouraged by me.
Keir Starmer last week also ruled out rejoining the EU customs union, saying that it would jeopardise trade deals he has agreed after Brexit, like the one with the United States. But the US has reportedly suspended its tech prosperity deal with the UK due to growing frustration at the implementation of that trade deal.
A senior JPMorgan banker has urged the European Union to follow the UK in scrapping its cap on bankers' bonuses. Matthew Wiltz, the bank's EMEA co-head, says the bloc is an outsider now as other regions move to roll back regulations imposed after the financial crisis. His comments come as the Trump administration is continuing to pressure the EU to ease rules in other areas, including on technology. Speaking to Bloomberg, the EU's trade commissioner pushed back against US claims that Brussels is preparing to water down its technology regulations. Mara Shevchevich says it's untrue that American companies are being singled out.
What I heard from Secretary Latning and Ambassador Greer was that they wanted to be treated fairly. So we had a lot of discussions. Are we aiming only at the US companies? Clear answer is no. Just look at the companies which we are investigating or eventually fining.
Mara Shevchevich was speaking after JPMorgan CEO Jamie Dimon last week said that Europe has a real problem because its slow bureaucracy risks driving away business, investment and innovation.
And lastly, the Nasdaq Stock Exchange wants to extend its trading to 23 hours a day. The second largest exchange in the US has asked its regulator for permission to add an additional trading session on top of pre-market and post-market trading. Supporters say that the move would allow US markets to trade more internationally, whereas critics warn a lack of downtime and periods of low volume trading could make the market more volatile. Other exchanges have also outlined their own path to extending trading hours on their venues, including the New York Stock Exchange, which plans to offer trading 22 hours a day on weekdays.
Those are your top stories on the markets. The MSCI Asia Pacific Index 1.4% lower this morning. Eurostoxx 50 futures are also down by 0.6%. Wall Street futures in the red as well. The 10-year Treasury yield is down a basis point at 4.17%.
Now, in a moment, we'll bring you more on the deep dive reporting Bloomberg has done into the sprawling and secretive Olayan Group in Saudi Arabia and why it's been a very bad year for luxury homes here in London.
But another story we've been reading this morning as we're soldiering through the dark days of winter in Northern Europe, thinking about where we might be planning to go next year. Well, Bloomberg Pursuits have you covered with their list of where to go in 2026. A mix of familiar places, perhaps, that are coming back onto the travel agenda, but also some places that you may not have had many friends who've already visited, frankly, if you have well-travelled people in your life. So in Europe, there's the likes of Sardinia, Corsica, Vienna, the Hebrides in Scotland, also the Peloponnese Mountains in Greece as well, among their list of recommendations too. So each destination comes with some luxury accommodation suggestions in case you're dreaming in that direction, and also helpful seasonal guides on when to go. For example, They don't recommend going to the Hebrides between January and April, I think mainly because it's very dark.
Yes, absolutely. That maybe is pretty local to where I am, only a few hours away. I love it. High-end hotels for under $500 a night is sort of one of the key aims. The photographs are just absolutely stunning. I mean, Sardinia is a definite yes. The Lone Star State, Texas, I don't know it very well. I'd love to go there. But yeah, the Scottish Hebrides, definitely to be avoided, I think, at this time of the year anyway.
Yeah, but it is somewhere I'd like to go further down the line, so I'll be keeping this in my back pocket for the travel planning conversations over the holiday period. You'll find the story on Bloomberg.com. We'll put a link to it in our podcast show notes as well.
Okay, let's bring you more now on our top story. The Saudi family empire with global reach that's emerging as a major force in international finance. Lubna and Hutham Olayan have transformed their family's conglomerate into a $50 billion force with influence stretching from Wall Street to Riyadh. And our Middle East economics and government reporter Abir Abu Omar joins us now for more. Good to speak to you. Firstly, tell us about the Olayan Group and where it is invested and how it grew to this size.
Hi, good morning. So yes, Olayan Group is headed by two sisters that we mentioned in the story, Lubna and Hutham, that are in their early 70s. They've taken the business from their father, Sulaiman, who had started the Olayan Group after actually mortgaging his house for $8,000 back in the 40s and starting the business in 1947. So let me just run you through some of the numbers that perhaps tell the story of how influential the group is. Their U.S. stock portfolio is close to $13 billion. In comparison to the Saudi sovereign wealth fund, the PIF, it holds about $19 billion in stock in U.S. Stakes. Now, the Olayans have about $1 billion in BlackRock, about $1.5 billion in JPMorgan, and some stocks as well in Alphabet and Microsoft. They also had a major share in Credit Suisse before its collapse. Domestically, they're involved in real estate, private equity, and they bottle Coca-Cola. They're involved in Oreo and Colgate. But perhaps what tells, what alludes to the sisters' influence the most is the fact that we start out the story by mentioning how Lubna was sat next to the world's richest man, Elon Musk, during the banquet that President Donald Trump had hosted for Crown Prince Mohammed bin Salman in November when he visited Washington, D.C. A select number of women were attending, and she was one of them. So she's quite influential as the chairperson of Olayan. Her sister, we know, is the chairperson of the shareholders board, but together they are at the helm of one of the most powerful Saudi families and also one of the most influential Saudi conglomerates.
And it's also interesting, of course, that the Olayan sisters built this business environment in a landscape that's traditionally been dominated by men in Saudi Arabia.
Correct. And, I was just talking about this, and Lubna, as a matter of fact, we had seen her during the Future Investment Initiative in Saudi Arabia during October, where she was sat with the likes of Larry Fink and David Solomon during the first panel. She was talking about her experience as a woman at the helm of a major company in Saudi Arabia. And definitely it is the case that she started and her sister started, being at the helm of this huge company during a time where Saudi women were not even allowed to attain a passport without male guardianship. And so they had to go through that and turn it into what it is. But, one thing that I also want to bring to the table here is the fact that the two sisters and the family in particular has been quite close to the Saudi royal class during the 2017 jailings of prominent business people and officials at the Ritz-Carlton in Saudi Arabia. The family seemed to go away from that. The family were not affected by that. During the 2018 killing of columnist Jamal Khashoggi, Lubna came out during the FII of that year and said that the killing goes against the DNA of the Saudi people. And so they've stuck very close to the royals in the kingdom.
Yeah, it is an absolutely fascinating story about their wealth, how they've amassed it and their influence. Abir Abu Omar, thank you so much for being with us. That is our Middle East economics and government reporter on the rise of the Olayan Group. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Now, London's luxury property market is on track for its worst year since 2020 after a series of tax measures put off wealthy buyers. Data from the property company Lonres shows it's the second year since 2011 with no sales above £50 million recorded. Our residential real estate reporter Damien Shepherd joins us now for more. Damien, good to talk to you. Can you put this in context for us then? What does a good year look like for luxury property in London, and how does 2025 compare?
Yeah, I think London's super prime brokers have probably forgotten what a good year looks like in London's luxury property market. We're probably rewinding over a decade now, to the peak of the high-end London market. And to put this into context for you, 2024, so last year, was a very bad year in London's luxury property market, but we still saw at least 4 deals over £50 million, and one of those was nearly £150 million. And now you look at 2025, the biggest deals have hovered around the £40 million mark. Non-doms have been leaving, but the majority of them haven't sold because they don't want to swallow the big discounts that they'll need to agree to get their home sold to a buyer. So it's been a rough year out there for the top end.
What has driven the sentiment down among those wealthy buyers?
Well, it all began at the end of 2024 when the Labour government came in. They got underway with their tax hiking by hiking stamp duty on second homes pretty early on into their reign. This year, we've seen the end of a system that allowed non-doms to avoid taxes on their overseas earnings. We then had all sorts of speculation in the long wait for the UK budget at the end of November, which caused uncertainty and led to a big slump in transactions. And then when the budget finally came around, we saw a mansion tax for homes over £2 million. So it's really felt like the top end of the market has been hammered in so many different ways. And, you know, all of those headwinds have sort of come together to just lead to a big dip in transactions and therefore none of these mega deals that we've seen in previous years.
What do the signals look like for the coming year in this part of the market? Are things likely to improve?
I think, we might see a pickup in transactions in the spring. I think one of the big problems this year was the uncertainty leading up to the UK budget. The one thing that buyers and sellers in this market need is just clarity around what the tax situation is and sort of the environment that they're looking to trade in. So now that we've had the budget, there should be some more clarity to get things going again. But one of the big problems here that we'll see in 2026 as well is this huge disparity between buyer and seller expectations. There's even more repricing to be done now for homes over £2 million with the mansion tax. So we'll probably see about another 5% come off of those homes next year. So it depends whether vendors are willing to accept that their home is quite simply not worth what they want it to be.
Yeah, that's interesting. Well, look, just thinking back to this year, what are some of the biggest home sales in London that have actually happened?
Yeah, I mean, despite the downturn, there's still some sort of fun deals to dig into. So one of the big ones this year that caught the attention of the public was Star Wars creator George Lucas purchasing a £40 million mansion in North London. That's one of the biggest this year. We also saw other big deals from Silicon Valley investor Matt Kohler and a member of the Thomson Reuters family too. That was a flat in Mayfair. So there's been some biggies, but yeah, nowhere on the level of previous years and the £150 million deal we saw in 2024.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.